Good day, this is Donna from DB Tax Solutions coming to you again with some information from the tax world. And this time in this video, I'm going to talk about the cryptocurrencies and the virtual currencies. And it's very common now out there, even teenagers are trading cryptocurrencies. But what are they and what are responsibilities as far as reporting these? So I'm going to go ahead and share my screen so we can delve right to it. So in the tax return, you've noticed in the past couple of years that there is this question, the digital assets. At any time during 2022 or 2021, they've existed for a few years. Did you A, receive as a reward, award, or payment for property or services? B, sell, exchange, gift, or otherwise dispose of digital asset or financial interest in a digital asset? So you can answer yes or no in this question. This is your declaration that you have digital transactions. So in the IRS website, they actually have a site, frequently asked questions on virtual currency transactions. And there's really good information here. Some examples of scenarios that you can go through if you are dealing with virtual currencies. You can go in this website and search out for further information. But I'm going to touch on some few questions here that have been discussed just to clarify. Well, obviously, we're going to start with what is virtual currency. Virtual currency is a digital representation of value other than a representation of the US dollar. And so you've heard, most of us have heard of it by now. It's Bitcoin. It's one of the leading, most famous cryptocurrency, as well as Ethereum. There's Dogecoins, and there's hundreds of others of coins out there. It's virtual currency, okay? So how is the IRS treating virtual currency? They are treated as a property, like your vehicle, okay, and like an asset, and general tax principles applicable to property transactions apply to transaction using virtual currency. And there's more information, publication 544, sales and other disposition of assets, because digital currencies are considered asset. What is cryptocurrencies? You can read about that, but it's basically essentially the same as virtual currency. Will I recognize gain or loss when I sell my virtual currency for real currency? Yes, you will. Anytime you sell virtual currency, you will trigger a capital gain or loss. Now, it's also the same if you exchange, say, example, you have a Bitcoin and you want to buy Ethereum, two different virtual currency, right? So you exchange your Bitcoin for some Ethereum. That also will trigger the capital gain or loss. You did not essentially kind of quote unquote sold your virtual currency, but essentially you've exchanged it. So you've sold your virtual Bitcoin to get some Ethereum. So that triggers your capital gain and loss. So, right. So in that tax form that I showed you earlier, whether you have digital cryptocurrency transactions in the tax return, it says here, I purchase virtual currency with real currency and no other virtual currency transactions. Must I answer yes to the 1040 question? No, so you don't have to answer and check yes on that one. So you can say no. Even if you bought virtual currency and that's all you did not sell or exchange anything else, you are not required to say yes in that box. So you can answer no if you did not sell anything, okay? So how do I determine my gain or loss? If it's a short term or a long term. So short term, it's if you held that asset for less than a year, then it's a short term of investment. If it's more than a year, then it's long term and it's now subject to capital gains tax, which is different tax rate, which is lower than your regular income tax. So if you sold your asset and it's less than a year, it's short term, which means short term gain is taxed like your ordinary income. But if it's more than a year, then it's a capital gain tax, which is lesser than your regular income tax. I know I just repeated that, but you can Google the capital gain tax rate to see the difference between that and the individual income tax rate. So moving on, how do I calculate my gain or loss when I sell virtual currency? So your gain or loss is calculated as if you sold a car or something like that. What was your original basis when you first bought the car, when you first bought this digital asset? And then what was your proceeds when you sold this asset? The difference between that will give you your capital gain or a loss if you had a loss, if you sold it for much lower than your original price. How do I determine my basis when I purchase with real currency? When you buy digital currencies, there's a timestamp because it fluctuates. The value fluctuates every minute. So when you buy something online, digital currencies, there's a timestamp on that purchase and the equivalent market value. So that will be the basis that you will use when you report and when you finally sell your asset and use that as the basis. Do I have income if I provide someone with a service and they paid me with virtual currency? Yes. So you will report that as a self-employed income using Schedule C in your regular tax return. Anything that you work for and you got paid in virtual currency, that is considered as income. Just like if you got paid in US dollar, it's still work. It's just in a different form. So you will have an income to declare in your tax return. It's the same question here. Does virtual currency received by an independent contractor for performing services constitute a self-employment income? Yes. So that's the answer to that one. Same with what I just previously discussed. Again, by employer pay remuneration in W-2, yes, you include it. If you get a W-2 that has virtual currency, it's just like your regular W-2. You include it in your tax return. All right. So again, these are all questions about basis. What was the original basis? Again, it's timestamp. So you look at when you first purchased this and when you sold it. The difference between the two would be your capital gain or capital loss. Now, I want to go through some of the questions here about hard fork. When you receive cryptocurrency from an airdrop, those of you who are in cryptocurrency are familiar with this term. When you receive it, some are trying to promote their coins, so they give free coins, airdrop. When you receive it, and if there's a value to it, then the income it will be declared as equal to the fair market value of the new cryptocurrency. However, if there's no market value, is zero, then it's zero value. Therefore, if that coin appreciates later on, it becomes $1 a coin, and your airdrop you receive has zero value because there is no market value, it's still just starting out, then your gain would be $1. All right. How do I determine my basis cryptocurrency after following a hard fork? Again, it's when you receive that airdrop, whatever that market value is at that time, that would be your basis. All right. So then if you have multiple accounts that's holding your different currencies and you're just transferring one to another, if you're transferring one wallet Ethereum coin to another wallet with Ethereum coin in that wallet, then there's no transaction to report. However, if you're converting one Bitcoin here from this wallet and you're transferring it into an Ethereum in that other wallet, then that creates a reporting transaction because now you essentially have sold your Bitcoin to change it into Ethereum. So here is another question about soft fork cryptocurrency I own occurs. A soft fork, there's no reporting transaction. If you are familiar with stocks, if it's stock splits, it just means that they split the stocks, but you still own the same value of, for example, if you own an Apple and it's worth $1,000, and $1,000 is composed of 100 shares. If they split that and they turn it into 200 shares, now you own 200 shares instead of 100 shares, but the value is still 1,000. It's still the same. That just means that the value per stock has reduced. So you still own the same value. So there's no reporting. It's the same with soft fork in crypto and digital currencies. It just splits the amount of the digital currency, but the value is still the same. So there's no reporting that is required. Again, so there are all this information about donating virtual currencies. Okay, so same reporting, you need to have some records when you report and claim these donations for virtual currency. So there's a lot of questions here that you can go through. Really great information, and further information in irs.gov/virtual currency. But very important is you have to have good record for your for backup for your resources. There's a lot of transactions that happen in digital currency, and most brokers or wallets that you hold into now can give you a 1099-B like you do in a regular investments to summarize your capital gains and loss in that wallet or in that transactions. But if it doesn't, if you use one of those platforms that don't give you those summary, then you can employ some software, some app like Coin Tracker to be able to create that summary for you, because it can get really complicated, especially if you have a lot of transaction, not only selling a coin, but also changing coin from one coin to another. So Coin Tracker would help you out trying to sort those transactions at different times and give you a summary for your capital gain or loss in that virtual asset. So there you have it. In a short time, you've learned a little bit about cryptocurrency and how to report that. I hope this is helpful to you. Again, this is Donna with DB Tax Solutions. If you have further questions and if we can assist you at all with filing your cryptocurrency assets in your tax return, we would be happy to assist. Reach out to us. We would be happy to assist. And until next time.